In this presentation, we will continue on with our comprehensive problem. We're going to be filling out the balance sheet, now going to the liability portion and the equity portion of the balance sheet. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Last time we had put in the asset side. We're going to be pulling this information from the adjusted trial balance, where we are now over here in the liabilities section. The liabilities section is going to have, similar to the asset section, a current portion and a long-term portion. So the current portion we're going to break out under liabilities by saying current liabilities, then colon. That represents that we're going to have this subcategory of current liabilities. The liabilities are going to be all these orange areas here. So we just need to identify then, are these current or non-current liabilities? Meaning, are they going to be due within a year, or do we pay them after a year's time? So we have accounts payable is current typically. Wages payable, we're going to pay those as soon as the payroll comes around, so that's current. Unearned fees are typically current because that means we're going to do the work sometime soon, most likely for people that paid us before we had done the work. So typically those will be current. So note that all of our liabilities are basically current. We don't have any long-term liabilities. So we're gonna go and put those three into our current liability section. We will do that with formulas. So within cell J5, we're just gonna say equals, point to the accounts payable, and enter. Notice it's indented for us already. That's done by the Home tab alignment increase indenting. Then we're going to go to the next cell, and we're just going to say equals and point to the wages payable. And then same here, we're going to say equals and point to the unearned fees. Note that we could use a copy and paste or formula or a autofill by first. So I'm just going to show that. I'm going to delete that and just put our cursor on accounts payable, and then right on this little icon here and pull down. That's the autofill. So that's another way it'll still work even though we're talking about text here, because we're using a formula to pull over that text. Then we're going to go to the amounts. Now note that we have credits here. We don't want credits over here. We just want to add up. Hey, this is our current liabilities. So we don't need these credits. We don't want these credits. We need to take those away. The way we're going to do that with a formula is say instead of equals, say negative. And then we're going to point to that number. So negative accounts payable is going to take that 11,000, flip the sign, make it positive 11,000. We'll do the same for wages payable. So instead of saying equals, we will say negative, and then point to that 1,500, taking that number and flipping the sign. Same for unearned fees. We're going to take that 1,000, instead of just equals, we'll say negative, and then point to that 1,000, taking that 1,000 and flipping the sign. And again, note that we could still do that with an autofill too, so I'm just going to demonstrate. I'll delete these for now. And we could just autofill that down. So same thing, we can put our cursor right here and autofill it down, and it'll pick up the relative cell references. Now I'm going to underline this, go into the Home tab, Font, and Underline. And then we'll have the total liabilities. Now this is a bit tricky. We're going to put total liabilities here. And just type that in. I've double indented, so that's the space bar 2 times. So we've got current liabilities, colon, pulling those into the inner column, not because it's a debit or credit, but because we're going to put the amounts here and then total them up in the outer column. We've indented, and then we double indented the totals, which we're going to put into the outer column here. So now we'll total this up. We'll use the sum function. We're going to say equals SUM. Double click that sum function and highlight those amounts. The 11, the 1,005, the 1,000 adds up to 13,500. Note what we didn't put here, we didn't put total current liabilities. And that's because it's a little confusing if we don't have any long-term liabilities, meaning we could say this is our total current liabilities and just not put any long-term liabilities here. But we want a category saying liabilities. We have liabilities. We want our ending number to say liabilities. The other option is we could say, okay, well, here's total current liabilities, and then say long-term liabilities and have a 0, and then total liabilities being the same number. But that seems like a waste of space. So what we're going to do here is a little tricky here. We're going to say it's current liabilities, And then instead of having the subtotal of current liabilities, we're just going to say, hey, there are no other liabilities. So we're just going to say this is total liabilities and bring those out to the outer column, 13,500, rather than having another number here just to say the same thing, because there are no long-term liabilities. Okay, so now we're going to have the statement of stockholders' equity section. And this is kind of the most tricky section of our financial statements for the corporation. And that's going to be down here, the common stock, the additional paid-in capital, and the dividends here. So the thing is, with the statement of stockholders' equity, we typically will break it out into a few more components than we might see in, say, like a sole proprietorship. So if we have it here, we typically will have these components equals the common stock. We're going to say the additional paid-in capital equals the additional paid-in capital. Dividends, we're usually going to close those out. The other component typically will be that retained earnings. Retained earnings. Now I'm going to put these numbers here and show you this is kind of like the common error again that we'll have, and then we'll go back through it and I'll try to show you why this is a problem. So we're going to go back through here and just pick these numbers up. But this is a credit. We want to flip the sign and make it just a positive number in our statement. So to do that, instead of equals, we will say negative of that number and enter. Same here, this is a credit. We want to flip the sign, so we will say negative of that number. And then the tricky thing is dividends. I'm gonna leave that for now, or I'm just gonna say the retained earnings is negative of the retained earnings. And so obviously you can see there's probably a problem here. So I'm going to underline this, and we'll analyze what we have now and see what the problem is. So I'm going to underline this, and then we're going to have total equity, and we'll just sum this up in the outer columns. So the 30 plus the 70 plus the 0. We're going to do that with the equals SUM. Double click the sum function and highlight those three numbers. And we get to the 100,000. Then we're going to add up our bottom line number on this side, the other side of the accounting equation, total liabilities and equity, which of course are outer numbers here, liabilities and equity. So we'll add those up in our total. I'll do that with the sum function as well, equals the sum of the 13,500 and the 100, giving us 113,500. Now, of course, we see that we're out of balance here. So we have a problem that we are out of balance. And why is that? One, you might say, well, maybe we're out of balance by that dividends that we didn't include there. So that's probably part of it. 113,500 minus the 119,100, that gives us the 5,600. So that doesn't look like it's just the dividends. So there's going to be more than just the dividends that are going to be a problem here. And the problem is, of course, that the income statement, all of this, they're still blue. They're darker blue because they're on the income statement. That's what the colors are trying to represent. All of this is part of equity. When we close it out, it will close out to equity. So all of this is really equity. So we need to we're not including these numbers in the equity. And that's why some textbooks will often say that you have to do the income statement first to get to the net income number so you know what equity is. But again, you know, if we have a properly formatted Excel worksheet, it's really easy for us to do that calculation. We could just say, equity is, net income's 7,100. Total equity is 105,600. So we know what the number is pretty easily already. So we could put the total here for now and then just see if we're in balance and then move forward, because that'll give us the most assurance that we're okay and then going forward. Or we could put that where we know it should be, and that's in retained earnings, meaning all of this is retained earnings. So we have these two, which are going to be the amounts for the investment, and then everything else is going to be retained earnings. This is what we earned over the time period. This is our beginning balance, and this is what was taken out in terms of dividends going back to the owner. We'll explain that more when we do the statement of equity, but this number here I can just change, and we could say it's going to be the sum of all these. Now I want to flip the sign because that'll be a negative sum. So I'm going to do that with a negative sum. And we'll just say it's just going to be all of this. The dividends, the retained earnings, and all of the net income, or all the income statement. Enter, and there it is. So now we've basically found a home. I'm going to say we found a home for these for sure. And we've kind of found a home for the entire equity section, but we kind of cheated a bit in that we combined all these numbers together. So therefore, the equity section is really the section that we're going to reconstruct with the other two financial statements, meaning the net income is going to be calculated on the income statement, which will be the 29 minus all the expenses, or the 7,100. And then the statement of equity then will be all of this restated. That's how these financial statements fit together. In other words, this 105,600 will be on the statement of equity, bottom line on the statement of equity. The statement of equity will include within the calculation of net income, the calculation of retained earnings, the net income amount, which will be calculated on the income statement. So note we have these yellow numbers here. Those are our check numbers. These are the numbers that are going to be able to tie together from financial statement to financial statement, give us some idea that we are on track, that we're doing things correctly, things are working. So assets equal liabilities plus equity, that being our double entry accounting system, which we could see just on the balance sheet. That gives us the most assurance. That's why I like to see it first. And then we've got the statement of stockholders' equity, which will tie to the statement the statement of stockholders' equity. Our total equity will tie out over here, as well as these numbers, but mainly the total equity is going to tie out here, and then we're going to have net income that will tie out as well. So those yellow numbers are going to give us some better indication that we are on track. Now, as we go forward, we're going to make these yellow by finding a home for them with more specificity, meaning we're not going to lump these all up into one number. We're going to find a home separately for them, recalculating, getting back to this number, this 105,600. For more accounting information and accounting courses, visit our website at accountinginstruction.info.